Okay, good evening, everybody. How are we all doing? Hope you're all well. Hope you're all good. And as always, hope you can all hear me. Hey there, Stuart. Just let us know if you can hear me okay in the chat. Today, we are not going to do it in an hour and a half, I don't think. Bit of a lot to go through today. Hopefully still interesting. But to be honest, it's kind of worth talking about. We're going to go over things like the news, as we always do. I'm going to actually chat to you about Dynex. I know that research token video that I promised you all, so we're going to have a quick chat over where we are with that. Then we're going to revisit something I talked about a couple of weeks ago when someone asked me about whether or not the 4-year cycle is shortening. And week one, when it was mentioned, I kind of thought there's potential it could be. Week two, I kind of dismissed it, but I've not stopped looking at it because it's always good to just keep on challenging these things. And maybe there's a bit of evidence to suggest that we might actually be in shortening cycles. So I want to just share that with you, something that we can monitor going forward, but also the impacts of that being if we are in a short cycle where we think we may be looking at a market top, we could be way out. I want to have a chat about ETFs. I mean, can't go a week without talking about that. And then we're just going to have a look at macro and daily views on price action. Hopefully nothing drastic changes too much in the next hour or so that price action discussion will be relevant. But let's just jump straight in and go from there. Let me bring up these charts. We'll go through the price action at the moment. I mean, Bitcoin is still, we're sort of 7 weeks of continuous green. It's really been about 14 weeks of generally upwards since we had that stagnation down here and that last drop at around about 26,000. So yeah, still pretty bullish, still pretty positive. Got to see where that might take us. Looking at some of the other ones, bottom left-hand corner, the Dixie. Well, the Dixie's ripping back down to the downside, but a bit like what Bitcoin had. We had steady growth for 12, 14 weeks, a bit of stabilization, and then we're falling back down. For me, I think that level around about 101, maybe down to 1 dead, is its next real area of interest. That going down generally positively means that things like stock shares and Bitcoin, when it decides to correlate, will move in a similar, in the opposing direction, similar to the stock markets. So we'll have to wait and see. Ethereum's a bit of an interesting one because if we look on the right, Casper obviously ripping it, always ripping it, never seems to have too much of a downside. But a lot of altcoins have actually been ripping it over the last few weeks. And whilst Ethereum has, it's still within that pretty tight range where most things are making yearly highs. Ethereum's yet to break it now. We're right on the level if we open this one up, and we'll go into more detail with it later. But we are right on this level here. And I think we break that, and then actually we may be looking at that 2,500 because, that's sort of the next area I'd be interested in. But we have been struggling to get through this one. So it's an important level it's at. I don't think it's done as well as other altcoins at the moment, which could mean that it is storing up that energy for a lift up to that 2.5, or we're right at a point in which previously we've been rejected. Maybe it is a turning of the tides. We'll have a look at both those options a little bit later on. Let's just get rid of all of that. As always, guys, feel free. Hey there, everybody. Chris, Adam, Mo, Cliff, and Jeff. Good to see you all. Thanks for turning out. Any questions, anything you want me to go over again, feel free to drop it in the chat. I am always looking over. So hopefully we can see that. But let's just go for the news, and I might skip through this quickly because, as I said, we've got plenty to chat through. So when we went live last week, we had the news at exactly the same time we were live. So this is a week old, but in terms of this video, it's on time. That Binance was being charged and it had reached a settlement agreement with the Department of Justice. $4.3 billion, I think it's the largest fine in for that kind of sector. But as well as that, CZ, Shapeng Zhao, had to agree to step down as the CEO of Binance. He too has pleaded guilty to fraud charges or anti-money laundering charges, which we'll get onto a little bit later. So Richard Teng has been installed as the new CEO of Binance. Now, he isn't just new to Binance. He has been part of the Binance team, I think global head of regional markets for a few years now. He's been certainly in the financial space for many years. And I suppose a lot of people, certainly in our group, were a bit miffed because he didn't feature on the World Economic Forum website. And, as people in crypto, we don't like the World Economic Forum. So I don't really have a problem with it. I am but a humble user of Binance. So whether or not he has ties to that isn't going to individually change me. My stance on centralized exchanges. they are, what's the term I'm looking for here? They're a needs must. I'll use them only when I have to use them. I understand the concerns that potentially they could now be the puppet master and pull some strings, but ultimately, were they able to do that anyway? The fact that Binance has finally been brought down, you could argue potentially they're getting their way. Now, within the article that I was just showing here, it kind of talks about what Richard Teng's proposal. Should we call him RT? It seems we abbreviated CZ to ZZ, so RT. He's still looking to grow. He wants to make sure that there is still that they're the leader of the market. So there's nothing really too much to go through in this article. What is interesting in the bottom of this article was CZ. He pleaded to one felony charge, and he is individually has to pay $150 million to regulators. Now, that's a hefty personal fine. He is arguably the richest man in crypto, so I'm sure he has the money. But yeah, a large fine. I think potentially got overlooked in the news because of the 4.3 billion. Now, this is it's not necessarily a news article, it's just a thought piece on terms of why Binance's plea could be positive for crypto adoption. And we've known for years that, crypto is a wild, wild west. And whilst there's been a lot of shit thrown at Binance, the fact that they'd created Binance US, they were kind of never really looking to bow down to US legal requirements of whatever it is that they need to do on the wider market. But actually now it does seem like they are starting to potentially look to embrace the regulations, and that could actually be a positive step. We've all been caught out in one way or another in terms of, I say we all have, I certainly have, in terms of scams or hacks or fraudulent activity, and just it's difficult. That's why it's got that term, the Wild West. Anyone could be there shooting you in the back. But Binance being the biggest centralized player there is, if they're now open to getting into a settlement agreement with the Department of Justice, we still have the SEC charges against them, and we shouldn't forget about those either. But could this now be the beginning of them wanting to smooth the way into that regulation? And that could be a positive step, because ultimately this is the biggest exchange. So, people talk about Binance wanting to go down or wanting to take Binance down. That's going to have a massive implication on the market. What we actually need, given, whether we like it or not, Binance is so tightly entrenched within the crypto market. We need them to play ball, and ideally we need them to get on with the US. And paying this fine, accepting these guilty pleas, certainly from the point of view of the Department of Justice, is effectively giving them a clean slate. But what it also means is that going forward, they're going to be a lot more open. And they're going to have to be a lot more open with the Department of Justice for that. But that isn't necessarily, it's great for us, because it de-risks it to some extent. Yes, okay, there's another element in which, these government agencies can get their fingers within an entity. But, that's just the price we have to pay for some form of stabilization. But also, it's not that bad for Binance. And why I say that is all of these ETFs that have been launched, effectively, they're looking for custodians to look after their Bitcoin pots, and most of them are going with Coinbase. Now, you could argue that they're trying to take Binance down, is just to prop up and promote Coinbase more. And I think this week alone, it's spiked up 18% Coinbase stocks on the announcement of that fine. So, I definitely could argue there, but potentially, and I think there's a long way for it to go for this, because it does need to build some trust with the US. But is there now an opportunity for Binance to open up its doors to become the custodian of some of these large ETFs Bitcoin holdings? We'll have to wait and see on where that goes and how they are actually going to play in the future. But I think for us, it is a positive step. The article goes through a couple of other opportunities to get there. This is a bit of an interesting one. So because CZ appeared in court last Tuesday and pleaded guilty, it currently has been said that he is not actually allowed to leave the United States until his sentencing hearing. Well, his sentencing hearing isn't actually till February next year. So he's arguing, well, I'm not a flight risk and I'd like to go back. He's from the UAE. I'd like to go back and see my family for the next few months. But the courts at the moment have said you are a flight risk, and so therefore you are not allowed to travel. I actually think this is incredibly harsh, bearing in mind that he voluntarily gave himself up, entered a plea, flew into the country to do that. He's arguably the most famous face in crypto. And if nothing else, He's probably one of the largest holders in BNB. And you could almost hold over if he doesn't come back into the country. Is that going to have an implication on the settlement agreement with Binance overall? So I don't know whether or not it will be overturned, but again, I feel just something that was kind of overlooked that actually now has to stay in the United States till February until this is sorted. But yeah, we shall see. Speaking of people that have thought they've evaded the clutches of the US government, Do Kwon, our favorite Terra Luna CEO, has finally had his extradition approved by the Montenegro courts. Now, for those of you that, it was over a year ago now, so you may not have remembered, but obviously he fled. He was, globe hopping until he landed up in Montenegro, and then he was caught out. And two countries have filed for extradition. So South Korea, that's where he's from, so they want justice. There's also the United States, and you could argue when the United States wants to punish someone for defrauding their people, they usually get their way. Well, the Montenegro courts have effectively gone through the extradition paperwork or decisions or whatever, and they have approved those. Now, there hasn't actually been a determination yet, so which one he's going to, and that, I understand, it is actually down to the Minister of Justice to make that final decision. So we'll just need to wait on that. But the courts themselves have effectively cleared the way. I mean, hey, we could take bets on whether it's going to be United States or South Korea. I kind of think it's going to be United States. I think they have got in their mind a billboard of people that they want to take down. SBF, CZ, and Do Kwon would be great. And then for my personal list, if we can take out Richard Hart, the world would be a better place. I don't mean to, end his life. I just mean, yeah, you know what I mean. So moving on to something else, which isn't really, it's not a news article, but I think it's kind of interesting and newsworthy. Has anyone been following this Bitcoin address? And you probably haven't. But it has started, people who follow wallets have started to comment about this on crypto Twitter, crypto X. This wallet didn't exist 3 weeks ago, effectively 3 weeks ago. And in 3 weeks, they have amassed over 10,000 BTC. They have been buying, in inverted commas, certainly sending Bitcoin to this wallet every day. I think it's averaging out at about 600 Bitcoin a day that they've been sending, but it has absolutely shot up. I don't know who the wallet belongs to, but I will be following people talking about it to see if we can find out who it is. But why is it important? Well, this wallet has gone from 0 to, oh, I've got to scroll down to it. I thought I was already there. This is here to the 73rd largest wallet. It's only taken a month to do it. And it doesn't seem like there's any signs of them slowing down. So it'll be interesting to see sort of where they get to and how much they get to. I mean, if they do 600 a day, they're going to be at 70. And then you can just see how quickly this could hop up and hop up and hop up. Now, could be an exchange, could be a potential ETF player, could just be some absolute whale just moving some money around, or some Bitcoin around. But yeah, certainly quite interesting. And then the final bit of news. Today, that was a bit the squeak of the voice box there. It's quite an important day in Bitcoin's history because 11 years ago today, so the 28th of November 2012, was the first ever Bitcoin halving. And Bitcoin halvings are going to be talked about an incredible amount over the next 4 years and even for the next 100 years. But for 11 years ago today was when I wasn't around in the Bitcoin space then, but when the Bitcoin space experienced its first halving and experienced, to really get to see to experience the vision that Satoshi set out in how he was going to release the tokens. So I'm sure most of you are aware, but prior to the first halving, the emission rates per blocks was 50. And then as of the 28th of November 2012, that dropped to 25. And then on, I think it's the 16th of July 2016, it might have been the 26th, that dropped to 12.5. And then we had the one in May in 2020, which dropped us down to 6.25. And then next year is where we're looking at 3.125. So you can see how quickly it is going to drop off. And it actually won't be too many halvings away until we're less than 1 per block reward. But this is what started it all. And when we talk about that 4-year cycle, which we're going to get onto later, it's that scarcity which drives the price. And whether you're a big fan of Plan B, his stock to flow charts and all of that kind of stuff, that's how it's driven. It's on supply and demand, scarcity, and this, you know, constant every 4 years until the mining's done in 2140, just repeating of the halvings. But yeah, it was a monumental day. Not that I was part of it. For any of you that, I mean, I will, because, you know, I talk about it, but I was there the second of the last halving. It's a pretty uneventful event. I'll be honest, you know, it literally, the clock doesn't stop. Everything just resets. So that's it, you know. So if it does happen to be at 1 a.m., you know, sometime in April next year, I'm not suggesting you set your alarm clock for it. But, you know, for those of us that are really into Bitcoin and into the whole crypto space, they are momentous events. I'm not sure I'll sit down one day and tell my grandkids about it, but maybe we will. Yeah, this was just a chart. I mean, shocking to think that. So this is the date, Wednesday, the 28th of November 2012, and it was $12. $12. I mean, if I just take this and put it on the linear chart, and just you see sort of where we ended up going after that. I mean, the amount of times I have to scroll bunch. I'm not even at 1,000 yet, but you get the point. The power of what we sort of witnessed, trying to get it all on, and where we are. That tiny little blip there was the first halving, and then everything goes. But you know, you remember how spiky that all looked back then. That's now a flat line. Who's to know where we're going to be in 10 halving cycles time? This may well look like a flat line itself. So yeah, pretty impressive. You know, and it's what started our entire addiction to that 4-year cycle. It's just nice to see. Let's have a look. So Richard's put, if the US wanted to try and bring down crypto for good, what do you think they would target? Could they, in theory, ban stables and introduce their own digital? No, I don't think they could. I mean, should I say, I don't think banning of stables would bring down crypto space, because would just come up with another way. You know, like, what is a stable coin except for a token that is backed by dollars or whatever? You know, we'd just find another way to back it. I just don't think, you know, barring a solar flare that wipes out, you know, anything electrical, I don't think there's any real way of stopping crypto now. Whether or not it continues to be used and thought of, you know, that's another thing, and that's that sort of reputation that they'd have to target. But in the 15 years that we've been going, or nearly 15 years have been going, they've been targeting the reputation of Bitcoin and crypto space. And I've got to say, they've been doing a pretty piss poor job of it, because it's just, you know, it's just encouraged people. And it's not just, you know, just, oh, well, those that were in from the beginning have remained in. No, more and more people have got more and more disillusioned as we've gone on, and they've come to crypto. Yes, a lot of us flock to it for the easy gains. It's not easy when you're actually in it, but many of us stay because we actually believe in what it is. So, yeah, taking out stables, taking out Tether, something like that, it'll damage it. Of course it will, but it won't kill it. And there's no, you just can't kill Bitcoin. So you can target from a reputational point of view. And for those of you that are in Discord, I didn't cover it today because I didn't have enough time, but do have a skim over that article I put about the electrical, the energy company, sorry, coming out and actually saying how positive Bitcoin mining can be. What a narrative change that's been. You know, you think about Elizabeth Warren just beating the drum over it during the bear market. Now suddenly ETFs on the horizon, bull market on the horizon. Now we're getting reports from the energy companies saying that actually the way that Bitcoin mining is done could be good for the energy sector. So, you know, that whole reputational side, maybe it's not the way to do it. What implications would that have, and would it affect people buying and selling crypto? Well, you know, as I said, you know, you take out stables, it's just easy for us, and it's easy to visualize how much something costs when we can just equate it to something that we've used our entire lives, whether it be a pound, a dollar, or whatever. Because in our mind, you know, we can understand what that is. If we had to move to something else, and it's like a lot of people struggling to understand BTC pairs, because you're now suddenly moving it against two very volatile assets. It's not impossible. You just got to sort of focus your mind towards it. So I think that those that want to stay in the sector absolutely will. But yeah, that's my thought on it. Doge will be celebrating. Yeah, I mean, Doge, it's amazing to think that, you know, of all of the altcoins, the earliest altcoins that were out there, Doge is one of them, and it's still here, which is, yeah, remarkable, really. Okay, let me just have a quick sweep. I don't think there's anything else. I'm going to quickly just touch on Dynex, I think, because I've been promising you this Dynex research video for a while. And obviously I am moving away from doing research videos during these live calls to save time. I think it's just a bit more focus. But I've got to stick my hand up, wave the white flag, and say I actually don't think I will be able to do this Dynax video for the next couple of weeks, and it's not through a lack of trying. I'm going to go over it very briefly now, but the reality is I actually don't understand it. I don't understand. I understand what it's trying to achieve, and I understand a few elements from it which I think are noteworthy to talk about. But when I like to do a research token, I like to actually understand what it actually is. And ultimately, when this gets into the weeds, it is very technical, and that is kind of confusing. So that's it's been kind of hard for me to understand it. I'm just not smart enough. Doesn't necessarily mean I don't like it. And what I've read about, there's definitely some really big positives. There's a couple of negatives that there always are in these type of things. But for me to actually do a video for you guys, I just don't think it's there. I will say it was talked about in the cuddle, and that video will be out soon. So there's potential that you may get some understanding from it there. But let's just spend 5 minutes on it. And I got some of the notes that I've taken just here. So what is Dynex? Why does it appeal to me? Bar the fact that you guys always talk about it. Well, it's a cloud-based computational power provider, or a power share. So being able to utilize spare capacity in people's PCs, generally GPUs, I suppose ASICs in a way, to undertake tasks when they're not being utilized for their main purpose. Now, there's another token, Render, which does something very similar. You guys know I'm into that one. So immediately, this is ticking a box which I can understand and go, yeah, there's a real world requirement for that. It's then when it starts to talk about how it does it, which is where it breaks down for me. Because we go on to say this is the world's first neuromorphic supercomputing blockchain based on Dynex solved chip algorithm. The proof of useful work, which is a little bit different to proof of work approach. But I'm like, what the hell is a neuromorphic supercomputing blockchain? And I'll try and explain it from my point of view, but it is paper thin, the knowledge there. So their goal, their mission statement, I suppose, is to be the largest decentralized supercomputer in the world. And to be fair, there's definitely demand for it, and ultimately there is a lack of supply. So there's so many industries and sectors in which this could target, in which they would find some benefit from it. Because if you do need a large amount of computing power, that's very capex heavy in terms of costs, and if you're not using that 24/7, plus it always needs to be replaced and updated, etc., that can be very expensive. So people will be more than happy to farm that out. And so areas, whether it's in AI, whether it's in medicine, whether it's in construction, or even in, it's endless really. I mean, Render, I was going to say, talks about sort of the movie sector and sort of Hollywood and sort of all of that kind of stuff. But it's there. So, well, turning the page over, what is neuromorphic computing? Now, this is where it goes beyond me. So, basic computing, and you think about some computers we have, it's sort of zeros and ones, okay, and it's kind of dictated by what you might have heard but maybe not know, Moore's law, in terms of every 18 months computer technology ability doubles in size, but it shrinks by half. Sorry, it doubles in capability but it shrinks by half its size. Well, what Dynex are saying, and others, to be fair, are saying, we're kind of getting towards the end of Moore's law in terms of what we can really do with computers, how we currently use them. And so that's going to model's going to break really, because it's going to get to a point where we can't surpass it. Whereas neuromorphic computing, that's not dealing in zeros and ones. That's dealing more in voltage, in terms of sort of like what it says in the to here, minus ones to plus ones. And to me, that kind of makes me think about it. It's almost how a brain works in terms of electrical impulses and getting things going. And what they're saying here is, instead of you having to do a singular task in zeros and ones, you can actually run multiple tasks in parallel. And that's where ultimately the proof of useful work comes into play. And when I was watching an interview with the CEO, I can't pronounce his pseudonym, but he was talking about this, example of how can you explain proof of useful work rather than proof of work. So proof of work, you effectively assign GPUs, ASICs, whatever, to undertake the mining, the management of the network, whatever you want to call it, validating, distributing the ledger, etc. Right? That's all they do. That's all they can do. Whereas proof of useful work, yes, you're still using that computational power to undertake the running of the network, okay, as you would with any proof of work. But that doesn't take its entire function or power. Matter of fact, he kind of uses the analogy, it probably takes around about 5%, leaving 95% for you to assign to other tasks. So you can still, be a miner, but you can then undertake tasks as well. So you can be paid to do that whilst also being paid, the block rewards. And you can have 95%. And so that's where the useful works. You can assign another task. Actually, you can assign a lot of the tasks. If you don't need to use all 95% of your spare capacity, you can then queue that up to do multiple tasks at the same time. And so that's where the proof of useful work comes into play. And that's kind of where I get to, unfortunately, with my understanding of it. Now, they do have some real world case studies in which they've undertaken it. And again, they get talked about in the cuddle. So do have a look at those videos. It does have everything that I normally look for. So we've got things like the white paper. It's complicated. I got lost. I'm going to try and do this for you. I just need a couple more read throughs to try and understand it. There is a frequently asked questions page, which is, you might think it's a bit noddy, but actually for someone who doesn't understand it, this is actually quite useful to go through. And it talks about sort of the mining and how that works. It talks about the team. Now the team is anonymous. It's undoxed at the moment, which is not great. It's not a deal breaker, but generally we like to know who we are dealing with. They've kind of set out the criteria as to why they are not doxed, but once they've satisfied all of these 4 things, legal, tax, IP, organizational, they've said that they will dox themselves. So they haven't given us a timeline on that, but at least there's some KPIs for us to have a look at. Total supply is interesting because if you look everywhere, it has 100 million DNX, and it says 64 here. It's around about 77 million is out at the moment. I think on the current space, it's around about 125 DNX are issued as rewards, block rewards, and the block reward time is every 2 minutes. But you can now see down here, it says a max supply of 110. And that's because effectively, back in the early days, when this first launched, I think there was some scrupulous activity that was undertaken by some miners. And so they basically just almost hard forked those 10 million off. So those guys that managed to get those through dodgy means, they've got them, but they'll never be able to use them. And so they just created another 10 million to actually make it back to the 100 million. So there really is 110 million. For all intents and purposes, it remains at the 100 million. So if you ever see a difference, you'll see why. It's got the emission schedules fine. And then it kind of goes into the mining capabilities and what it does. I'm not going to run through it all here. It's fine there. This Dynex in 10 layman terms, I think is quite useful. When you read that, you'll know where I got my information from. So let's have a look at the price. So I always compare the two. So we've got Dynex on CoinGecko and Dynex on CoinMarketCap. They're pretty much the same. So we'll just stick with CoinMarketCap because that's where we are. So it's coming in at 97 cents. Now it spiked up last week to around about 130, 127 or $1.27. Lo and behold, that was like the week after we had the cuddle. So I think obviously what we were talking about there must have sparked some interest. Prices flown up. But I did speak last week about I think it will retrace and come back down. And I was kind of suggesting it's going to be around about 90 to 80 cents we're going to get back down to. So we are in a bit of a downtrend at the moment. And this hasn't performed as well today as everything else has. But, that doesn't mean every coin goes in the same direction at the same time. So we've got a market cap of 75 million. So it's a small market cap. That's potentially good. A 24-hour volume of nearly 3 million. So it's around about 3.5% of the overall market cap. As I mentioned, circulating supply is currently 77.5, and we know the max supply is, whether you want to look at it 100 or 110. Probably should look at it as 110 because those 10 million I'm talking about are still in this number. So, that's where we're at. In terms of markets, basically it's just Mexi. You can get it off. That's pretty much where it is. I don't know LBank, and I don't know Bitmark, and I don't know BingX. So Mexi is the one. If we have a look here, now actually, I swear it's a bit different. So it's got it back to the 14th of October. If we go back to CoinMarketCap, it started off its price on this chart at 15 cents, and we're now, you know, a 6x from where that is, which is not bad. You know, if you think you feel like you've missed the boat in this, in terms of from a chart point of view, you really haven't. There's definitely some potential within it. Having a look at the charts, this is what we discussed last week. So we drew the kind of the Fibonacci. We thought, yep, it's gone and shot up there, but it's probably going to pull back naturally to here. We may get it down to the 618, but this one seems like running into the 50 EMA and then the 786 around about 90 cents. That seems to be where we're currently sitting at the moment. In all of the research that I've done, you know, I kind of said to you, I don't understand the project, which isn't necessarily a problem. If I understand the overall concept, I can see the demand from it, fine. But what I'd like to then be able to do is put my trust in something else. And we talked about the team, and the team is undoxed. So we don't know who the team is. And that can be a bit of a problem because we don't know who we're putting our faith in. I don't fully understand everything else. So I kind of would like to have some faith within the team. So I was trying to do a bit of research around who the team is and where they sit. And I have found a few documents. Now, it's blatantly obvious that these people do not like Dynex. It's fine. You know, you just got to take everything where, you know, with a pinch of salt, you know, just try and read as much as you can about it and make your own informed decision. And long story short, they think that they've been able to undox the CEO. I was hoping it might have his name. It will have it when I come back down. But they think it's an Austrian businessman called Daniel Matz, who's previously orchestrated scams as sanctioned by the SEC, which is not great, I'll be honest. But, you know, it's not confirmed it's this person. I'll post this article so you can have a read through it. There's definitely some compelling evidence to suggest it is this individual. I've not had enough time to actually research what this individual did, but they go through a lot of the failed companies and potential scam companies run in the past. As we know, scam people, artists, whatever you want to call them, I'm not saying it, one, it's Daniel, or two, this token is a scam. Let's just move that conversation to something else right now. But we've gone into things before that we've believed were very good. Let's face it, as a group, we fell into the rebasing DAOs, particularly Time, particularly Olympus. And, you know, I mean, look at Wonderland Time with their chief financial officer, Seafood. Pretty scam artisty there, wasn't he? We had all of those problems with it. And he was a doxed individual. And when we found out who he was, you know, we had a lack of faith within the project, and it kind of all fell apart from there. And so, you know, the question of why you keep yourself doxed is an interesting one. Now, they go into the fact that actually they're not doxing themselves because of proprietary technology or you know, IP, because a lot of it is actually already out there, whether you go in GitHub and all the other things. So it's got to be because they're trying to just keep their identity safe. And yeah, okay, they want to set themselves up, but does that necessarily mean you need to hide behind a veil of secrecy? I'm not necessarily too sure. Anyway, you can go through this, you can have a look at it. They also go into the fact that it is incredibly complicated to try and understand it. When you do get into it, it just has so many turns to try and get to the bottom of it. And I'll tell you a good yardstick for whether or not you can understand the project. You go onto YouTube and you Google, what is Dynex? There isn't a single influencer out there who sit down in front of a camera for 15 minutes on their own and just tells you what it is, because I couldn't find it. There's interviews with the CEO and there's interviews with people that are really passionate about mining, and I get it. But there's no one that sat there and says, I know what this is confidently enough that I can just talk to the camera for 15 minutes about what it is. So, you know, that's something there. As I said, I don't understand it. I wish I did. And then he goes into some other things. And this individual here, one of the main reasons is there was an AMA that was held for Dynex, and they were obviously having issues at the beginning of the call. So the host was speaking to the CEO and was like, what's your name? What's your name? And he quite clearly, I'm not going to play you because it's 2 minutes long, but you can follow the lead, quite clearly says it's Daniel. And interestingly, the host of it is this lady here, Caroline Lynn Safari or whatever, which I believe is Daniel's wife. So, you know, there's definitely a lot of smoke to suggest that it might well be this individual. There's another article here which kind of goes into a bit more detail, and when they go into some of the hex editing files, they can clearly see that it's Daniel's name, Dynex, within the coding and all of that kind of stuff. So I'm going to kind of leave it there. You can check it all out for yourself. Yeah. So where am I? I actually do own a little bit of Dynex, don't get me wrong, and I'll probably buy a little bit more when it goes back down, but I do not have much confidence in it at the moment. I will continue to do some research, and if it's something that I like, I'll stick with it. If not, I'll move on. With that being said, I'm going to do something this week because I feel like it's been a few weeks since I've done a proper video. So I'm going to do Injective. It's one that I actually want to cover, so I've bumped it up the list. So that's going to come out on Friday. So keep your eyes out for that one. I will get back to Dynex when I fully understand it. I promise. Okay. Does Simon understand Dynex? Take it he must know, otherwise it wouldn't have invested in it. Wonder if you can do a video. So as I say, it was actually talked about in the cuddle. Whether or not he understands it, that, you know, I'm not here to say that he doesn't understand it. I'm just here to say that I don't understand it. Yeah, I mean, a lot of the anecdotes that he talked about in Dynex are exactly the ones that I saw when I was doing my research. So that's fine. We could be looking at exactly the same research things. What might be worrying is that Dynex just roll out the same anecdote every time, because it's a very compelling story about this bridge that they needed to put some columns on it, and the architect couldn't work it out, and they were taking days and months to do it, and Dynex solved it in like a minute or whatever. But yeah, anyway, I'll leave that one to you. Right, let's move on, shall we? And we'll try, oh, I don't know why that's there, talk about this. So I was being a bit lazy this week, and I just did the same thumbnail and just stamped take 2 on it. No, I was going to create another one, but ultimately, a couple of weeks ago, on the 14th of November, we were talking about whether or not our trusted model, the 4-year cycle, was about to break because it was looking a little bit different. And as I mentioned to you, and you can go back into this video here, minute, whatever, we're at 52 when I start talking about it. You know, I basically said that what I looked at, maybe there wasn't enough compelling evidence to suggest that actually we are going early, even though this pump is worrying, because unless we get a pullback in the pump, and this is actually the start of the bull market, it feels like everything's moved forward 6 months. But I wanted to continue looking into it, and you know, the 4-year cycle is something that so many people talk about, whether you've seen my charts on the screen, which kind of just indicate those periods of, you know, pre-halving, post-halving bear market. I know that Simon's posted some, and it's a pretty messy chart, but it makes sense when he goes through it. But it indicates with the blue lines and the similar kind of like bull run, bear market, consolidation, bull run, bear market, consolidation, all fitting nicely, neatly within the 4-year cycle. But I follow an awful lot of people in the crypto space, and I truly recommend you do the same. Find people that you like or challenge your thought process. And CryptoCon, whether you love him or hate him, I think he comes up with, or they, I don't know if it's a he, some very good macro analysis on the crypto space, particularly with Bitcoin. And let's just be clear, I was going to say he, but they, you know, they believe in the 4-year cycle as well, but they've all offered an alternative theory. And I think it actually came out 22nd, so like a week after what I was talking about, and a day after last week's so I couldn't correct myself in last week's call. But I thought it'd be an interesting thing to have a look at. And he's talking about there are actually other indicators at the moment that are potentially suggesting, at a macro point of view, that we are ahead of schedule. And we'll have a look at this in a minute. Now, 2 things that come from that, you know, put a frog in boiling water and it will just boil itself to death. You know, like sometimes we just see the wood through the trees. We want to see what we want to see, and we just trip ourselves up with it. So, you know, take it all with a pinch of salt, but we'll just keep on adding every time there's a suggestion that it might be coming earlier. We'll investigate it. Then maybe we'll have enough instances where we have to take a little bit of thought process. And then when we actually get to that potential early period, we at least are on guard as to whether or not we are going early or going later. So he talks about this alternative theory, and he's utilizing the monthly stochastic to sort of indicate where we are in the 4-year cycle. Now, typically in the 4-year cycle, we top out on the stochastic chart in what he indicates as the red. I'm going to show you that in a second, which the red is effectively like the bull area, the proper full bull area post-halving. But what he's saying now is actually this last pump we've just had, we've actually hit this stochastic top. And we've been covering stochastic tops for about a month now on the weekly, not on the monthly, but we know we're very high on that. And so what he's saying is we've come 6 months early, so that potentially might mean that we're not looking at end of November, beginning of December. We're actually looking at end of June, beginning of July as a potential halving, which is going to be significantly earlier. And that could trip us up. So let's have a look at that chart. There it is here. Again, there's a lot of information on this because he's got dates and halvings and second halvings, and he's got how he's color coordinated. Each of this stuff doesn't necessarily match at the moment. Next week, I'm actually going to go through a chart that I've been building, which kind of looks similar to this. We'll have a look at it. But as you can see, what he's talking about is you got the I can't say it today, the stochastic chart, which is this blue and yellow line. For those of you who haven't been following, it's represented by the 8 and the 26 EMA, the 8 being the blue line, 26 being the red line. It shows momentum, okay, where momentum is. It's on the way up, we've got positive momentum. It's on the way down, we've got negative momentum, potentially bearish scenarios. They are not related, they're not indicative, they're movements into price, okay? So just because the stochastic has moved up 10% doesn't mean the price has moved up 10%. So there is a disconnect there, but at least shows us a narrative. And what he's saying is to get to that stochastic top normally happens when we enter this full bull zone, okay? And it's never really happened prior to it. So we've entered into this one here, we've bounced down, we come back, we've hit it again, just on the overlap. We've come here, we've hit it loads of times. It's not, you know, as I say, it's just about when we've entered it. This one here, actually, I think it is in the blue, to be fair. But it's right towards the end of the blue, after the halving, I suppose. It's the key. They do happen after the purple dot, after the halving dates. So we get into this one, and we've actually hit it already, and we're only at 37,000. We're months away from the halving. It's not even if we're close to it. So we've still got plenty of this blue bull period to go with. Yeah, we may already start to test this. Now, on the face of that, you could say, yeah, well, previous 3 cycles have said that we've only ever really hit it, no matter how many times we hit it afterwards when we're in full bull. Maybe we might actually now need to move the peak over to the left because all of these periods effectively match each other. But the other argument, as always with Bitcoin, is 4-year cycle. It's only had 3 iterations, you know, could be completely different this time. And that's the sad thing, ultimately could. Now, I'm very much of the view that I'm going to stick with it till it breaks because it's worked so well. But I think it is something that we need to look at. Now, again, this could very easily, I can't draw on this, unfortunately, so this one on the far right I'm looking at, the stochastic top, could very easily do what he did in cycle 2 and hit it, you know, plenty of times for over, you know, 12, 14 month period. Absolutely could do that. The point we're trying to say here is it's going to have to hit this for 2 years now to get to the point where it hits the market top and then starts to descend back down. So that's something that we need to have a look at. But I do want to throw something out here, which he alludes to in the diagram, but doesn't talk about it in the narrative. It's something that I mentioned last time. What if, I mentioned this peak here in April was supposed to be the market top, and actually November was just a fluke, an over exuberant dead cat bounce, which was never meant to eclipse 64,800, and yet for one day it actually shot above it, got to 69, and then pulled all the way back down and dumped back down. You know, that's still suggesting it. And one of the key things that I've always followed with that has been the pi cycle. So pi cycle in its history has indicated the market top plus or minus 3 days from every time the signal is triggered. And it even did it here. And we all knew about it here. Nobody believed it would happen. Nobody believed it. Effectively here you got the 111 and the 350 EMAs. And the point is that when the red and the green cross, you get an indicator, and that is the mark of the top. When they cross that line here, the mark of the top. And that's the weekly chart. It's plus or minus 3 days. I think actually every single time it's been on the day. Pretty remarkable. But this one here was supposed to indicate there. Now, obviously, we had another run-off. There was also a lot of other narrative in terms of volume, in terms of sort of exchange activity, inflows and outflows, etc. that suggested that this one here was much more in keeping with the cycle top. And as I said, and that could well be the case. Now, that goes against the 4-year cycle, because the 4-year cycle timings are very clear. We always get cycle tops in Decembers, and that exactly is what happened there. So, you know, there's arguments definitely for both sides. But if you actually have a look at his chart, we've got a similar thing being indicated here. And he didn't talk about it, remember? But he's got, I don't think there's any real key to suggest what this pink one is. But we've got the Bitcoin tops and bottoms are the sort of the dark pink dot. That's there in April. There's a secondary one in November where it actually occurred. And so, yeah, you know, it could well be that this is one of those indications. And maybe it's because this actually did appear in the blue rather than in the red. Might be a bit of a push there. But I think it's something that's worth exploring. I kind of dismissed it 2 weeks ago after actually putting it on a pedestal the week prior to that. And I think, you know what, I'm going to keep just having a look at this, because what we don't want to do is get to ourselves a position where we're all waiting for December 25, and then it actually happens in May, June 25. And what do we know about the markets? The markets, or the market makers, will always look for the max paying option. Everybody at the moment, including CryptoCon, is talking about December 25 is when the top of the market's going to be. So we know that they know that we're all thinking that way. So if the price does start going down early, we'll be like, no, why back up in December? And sadly, it'll be months until we realize that we were wrong. So what we need to be doing is preparing ourselves for that eventuality. And if enough indicators are suggesting that we might be topping out earlier than December, being ready to take some of that juicy profit that we always forget to take. Okay, let's have a look. Can you explain in more detail what cycle 4 it's the market in relation to the timeline? Oh, ignore me, you've seen that. Okay, yeah. So cycle 4, you've said you've seen it, but effectively is this year's worth, or this 4-year cycle's worth. It's broken down into 4 years. So green, I know you said you've seen it, but just for anyone else that hasn't been brave enough to ask the question. So anything you see in green on CryptoCons, I don't want to push, this is his, you know, not because I want to distance myself, but I don't want anyone to think I've stolen it. I think it's a very clear way of illustrating how the cycles are broken down. So you've got green being an accumulation year, 2 being a preparation year, then 3 being a push to all-time high, and then 4 being a bull year. Now, I know you're saying, well, wait a second, in year 1 of cycle 1, green was a all-time high year. Of course it was, because it was such a new asset and there weren't many other assets out there. But if we look at it on the grand scheme of everything else, that fits very well, especially what we've been dealing with in this cycle. So anyway, we shall see. We'll keep on exploring this one and where it's going. Pi cycle is an interesting one. I will say before you all start running to get the pi cycle. The pi cycle was actually invented in 2019. So it wasn't ever used during these cycles, but it perfectly fit it. And it was a narrative that was used, even by myself, hold my hand up, in 2021. I followed the pi cycle, saw it indicate, but everyone was like, nah, we've still got the momentum to go, and this has never been tested in an actual bull market. Well, now it has, and it worked. So, you know, when we start to see these lines converging, we should be looking for other indicators to say that we actually, you know what, we might be getting close to a market top. Yes, the pi indicator is free. Just bear with me. I used to have it where it'd say what it is. But I don't know where I put that in the settings. So I'll just show you where it is. Go into indicators, just type in pi cycle. And I just use pi cycle Bitcoin top indicator, Blitzerian candle. Now there are bottom indicators as well. And if you don't want to use these, you can just go on to look into Bitcoin. They actually have the chart on there. Look into Bitcoin. I strongly recommend, if you don't have it saved on your desktop or somewhere, just having this. It's a free, well, most of the charts are free, source of just some great information. And this is all changed what it looks like from where I saw it before. So let's just type in pi cycle top indicator. And here it is. And so here it goes again. And I don't like using this, I'll be honest. I used to be part of looking to Bitcoin's drone Patreon even, which was pretty good actually. And you got given the indicators which you then overlay onto your BTC. But the price just kept on going up and up and up. When I joined, it was like $2 a month. I think it's like about $24 a month now. So for some indicators I can get for free elsewhere, I've just decided to get rid of it. But this also gives you a you know, why it's created, how it works, etc. So look into bitcoin.com. It's great for all these kind of stuff. Hope that helps. Okay. I wanted to address something else that Richard, you mentioned last week about ETFs, because we talked about, you know, sell the news, buy the rumor, sell the news. And you asked for sort of my opinion, and I started waffling on like I always do about whether or not BlackRock and others have already started buying the Bitcoin and how they could move that across without affecting the price. And I was gonna, if you remember last week, I didn't do it in the end because I didn't have the chart ready, but we're gonna have a look at hash rate and sort of potentially how that is dictating where some of these price indications have been. Because if some of these large institutions are doing OTC, maybe they're buying directly from the miners, could it be that the hash rate is increasing exponentially and the price hasn't yet started to do that because that's where they're doing it? And then funnily enough, yesterday, Plan B said exactly the same. It's not very often that I can say that Plan B and I are on the same wavelength. I wish I was more. This guy's a bit of an OG when it comes to macro analysis. Whether or not you believe in his stock to flow, and trust me, he took a lot of shit in 2022 for his stock to flow model, but it seems to be coming back around now. So, you know, he's put a lot of faith in that. But he starts talking about this, and I thought it was worth just revisiting your question to just give you his viewpoint, which is put much better than my viewpoint was. Maybe put a bit of fresh light on it for you all. So, Plan B started talking about in his tweet. Breaking Bitcoin valuation based on difficulty, so hash rate, increased to 35k. In my opinion, that could mean that apart from possible black swan or short-term volatility, based on the dollar per kilowatt hour arbitrage fundamentals, Bitcoin will now never go below 35k. That's a bold statement to put out when we're only at 37,000. So obviously he took a bit of flack from it and a lot of questions, and it was some of the responses that he put that caught my mind. So one of them, one from NL Stacker, as you can see, it says, can you explain why price has gone below the hash rate model value in the past? Why would it be the floor now? Really seeking to understand. And we can, because the red, let's click on this. So the difficulty line is the red line, okay? The stock to flow is the dark blue. Time is value of BTC is the light blue. And the price has gone below it before, you know, in terms of difficulty. So why does that, represented by these dots, I should add. So why does that necessarily mean that he's so confident of this dot here being the bottom? And he goes on to explain. Since you can buy Bitcoin with dollars directly, as investors, we can buy it directly, or with kilowatt hours indirectly through miners. And what he's saying there is, you know, the amount of kilowatt hours they put into the mining of Bitcoin, they're rewarded with it. So they're still paying for it, it's just in kilowatt hours. There is an arbitrage, a model with the red line. Difficulty hash rate is rising fast. So what do miners know that investors don't know yet? Or are ETFs buying through miners? This is what started what I want to talk about. So that one comment there, because now a lot of people started to pipe in and say, well, wait a second, what are you talking about? So it's easier to find if I go through here. You can see he's responding to his previous one. So in his opinion, ETFs like BlackRock are currently front-loading BTC. But they're not doing it through exchanges. In fact, they're doing it through miners. Okay, so buying BTC directly on exchange would impact the price too much. Buying indirectly from miners would impact the hash rate, but not the price. Might explain the current hash rate explosion. And we've talked about that. I don't know why I keep looking down there. We've talked about that quite a lot in terms of, you know, OTC deals generally don't affect the price. They certainly don't impact it immediately because it's not done on the order books of exchanges. Exchanges may still be the middlemen doing it, but it doesn't affect the price. We've seen Simon in the group, he's done that with previous tokens before. We know he's looking to do that with some of his Casper as well. So, excuse me, is it likely the likes of BlackRock and Valkyrie and ARC21, I feel like I always say BlackRock, I feel, you know, doing the others an injustice there, but you know what I mean, ETF firms, are they going, well, I can't buy, I haven't bought any already, And I don't want to buy on exchange because it's going to push the price. Perhaps I can actually buy it off the miners. And it's definitely could be an indication. Now, we talk about hash rate climbing is a precursor to where the price is going to go. And, over the Bitcoin model, that is true. Whether or not it pans out day to day, week by week, I don't believe that. But if you zoom out far enough, hash rate's always gone up, price has always followed. But it takes another turn. Because, and I will sign out BlackRock here, would it surprise you to know that BlackRock is the major shareholder in 4 of the 5 largest Bitcoin mining firms? So they are Riot, Marathon, Cypher. They're not the largest in Hut, but TerraWolf. So they are the largest shareholder in those 4. So you're telling me that if BlackRock suddenly realized they hadn't got any, as the largest shareholder of those 4 companies, they wouldn't have access to buying those tokens directly from the miners? I think they would. And we know that the miners at the end of last year, beginning of this year, were struggling. We talked about how there was potentially miners capitulation because, the price of Bitcoin was far lower than the price they were paying for it. Well, what happens if their white knight or their black knight in BlackRock came along and was, well, I'll buy it off you. Don't you worry about that. They might even take a hit at the price that they were buying it there, knowing what it would be if they were trying to buy tens, if not hundreds of thousands of Bitcoins on the market. So, it's tinfoil hat theory, but it's a potential theory that I think is worth exploring, worth having a look at. And, for those of you that haven't seen it, this is kind of where the price and the hash rate are. So the white line is the price and the blue line is the hash rate. And you're looking at the difference here because, this jump here, beginning of the month was 452 million terahashes. Just want to make sure I got that right. And in the space of the month, we're at over 500 now. The hash rate has exploded, but it's exploded all through the year. And yeah, prices followed on this last ride up. But when price has been correcting over the previous 6 months, all this has done is just gone up and up and up. So I think there's obviously something there. Now, to counter that argument, people will say, well, I was supposed to not have the volume on at the time it happened. But let's have a look at Bitcoin. Like, when do we think this is Bitcoin, Binance's chart on Bitcoin dating back to its inception? What I want you to look at is an indicator we rarely use. This is the volume, the one that actually appears as standard whenever you open up a trading view chart. So, huge volume at Bitcoin's lowest price for the last year. I wonder who was providing that volume when everyone else in the market was scared shitless to do anything. Could it have been some of these institutions that were looking to set up ETFs later on in the year? Could well have been. And we talked about last week. I don't know the legalities of what they can buy and can't buy for their actual funds, but I'm sure they could buy it for themselves and sell it to themselves in some way of doing it. But look at the difference in volume. Even compared to what we experienced in that huge run-up for Bitcoin here, with volume 3-4 times the size of that. Back end of last year, from 3 hours capital crash, really, FTX crash, massive volume, and then leading on to this year, particularly around the banking crisis as well. So it's amazing, really, how much volume there was. Now, look, they're red and green candles, so it's not all buying volume. But I'm just saying there was a lot more volume in the market when the prices were at the lowest. So maybe BlackRock et al. Have not needed to go to the miners because they've already filled their boots with whatever they needed to fill. There would have been a lot of panic sellers here. Of course there would. We were in a bear market and it didn't feel like it was ending. Someone was buying all of that and buying it with confidence at volume. So, yeah, definitely something to have a look at there. Let's have a look. Pi cycle. It's free. I need to tell you the cost. I did actually, I think, in 2020. I just didn't do anything with it myself. Don't think we were on Discord then. I'll have a look back through Facebook. I'll see if I can find it. Richard, have you looked at Capo's market analysis much on Next? The guy everyone is slating because he's still out of the market, still very bearish. Matter of fact, here we go. I know because I thought of Plan B. This is it. So Capo's gave some thoughts last week. Current thoughts on BTC. So for those of you who aren't aware, Capo's very much been of the opinion that Bitcoin, this is just a fool's rally. Bitcoin's going down to 12K. He's been in that stance since the beginning of the year. And obviously he's been look rather foolish because it hasn't looked to have gone his way. So he goes through, I'm not necessarily going to read it. He's basically just saying the market's very greedy. This is just manipulated. It was a bear market rally. It's going to correct. If 31K doesn't hold, still thinks we're going to go down to 12. So yeah, it's definitely still there. Here are the charts that he's putting out. I mean, we'll get into the analysis later, but I do think that there is a bit too much greed in the market at the moment. There's a bit too, everyone's making money, everyone's posting how good they are, everyone's posting all the gains. A lot of people are saying, join my course, all the kind of things that you don't want to have because everyone's getting a bit full of it. And we know that the market likes to correct and slap you in the face when you do that. So I have seen it, yes. Chris, why would miners sell a large amount OTC as they would benefit from the price increasing on the exchange? Well, you know, back in the early parts of this year, you know, we were worried that mining companies were going to go under. So they were selling at a loss. So if they were, you know, at the time, let's say it cost them $19,000 to mine one Bitcoin and the price was only at 15,000. If someone came along and said, I'll give you 20,000, going to take it, aren't they? Even if they were, you know, because it's more than what the exchange were offering, I suppose. But I get your point, Chris. Richard, blimey, how has that volume not moved the price much? Well, you know, it's both sides of it. But just the fact that there were that, you know, each one of those bars on the volume bars, I mean, it indicates, how was that chart? I mean, you know, if we go in under, sorry, let me just see volume settings. I thought we might list, like, you know, if you zoom down, every single one of these actually have, like, that might be 10,000, let's say, and that might be 1,000. So each little thing indicates how many, but these are actual actions that happened on Binance over that period. Doesn't necessarily mean whether it is lots of greens being buys or lots of sells being reds. If it's more buys than sells, that's what dictates what the color is. But you can kind of see there were still bloody days, but just generally a lot higher. Now, again, you know, maybe FTX, we were losing exchanges, but we hadn't lost exchanges here, but we had that side. You know, there's loads of ways to skin analysis. It's why you can't just pin your hopes on one thing. You've got to, like, have a look at a variety of things and be able to have that critical thinking to merge that information together and come up with your own conclusion. And that's the best we can really do with it. It doesn't always work out, but that's trading for us, really. Okay. Let's have a look at, make sure I've caught up. And why haven't we seen anyone talking about this? It's insane. Well, I mean, there's so much that people talk about that actually, you know, you can miss it. And, you know, what I would say, for those of you who were at the cuddle and you saw my talk, I talked very much about, you know, don't be afraid to take profit. It was very much about making sure you don't lose money in a bull market. You know, we go back to those charts with here on. Where are we today? What do I need? I need a date range one. Date range. So here we are today. Let's say that this is 1st of December is where we're going. That's going to be market top. 1st of December. That's 761 days. It's 2 years. 2 years away. Right? Now, that's a lot of information that we're going to get over the next 2 years. Actually, that's also, it's a lot of work for us. You know, you can't be a tourist. You can't just dip in and dip out of crypto. Not at this time, because information will just pass you by. And so, you know, the biggest thing you can do now is to be active, whether or not you're engaging in it, but at least just sort of like taking on that information that people are providing. Don't throw yourself to one person's analysis, but have the ability to take in a lot of different ones, because in 2 years, that's going to take a lot of discipline. You imagine if you trained in the gym every day for 2 years, how stacked you'd look. Well, that's what you want to do with your crypto knowledge, if you will, for the next 2 years. You need to speak to Simon about that, Richard. That's not my call, I'm afraid. But right, let us go on to the next one. Okay, so I'm just going back to the thoughts we had at the beginning of the year chart, at the beginning of the month chart. And you know where the trend line started at the beginning of the year. It's been a pretty positive trend line all the way through. And this last month, you know, we have fought it. Now, a couple of days we've got over it, but generally we have been under it. Every time we've got over it, we've never stayed over it for a day. And look where the next battle are. Now, I've just been on high block today, and I've just updated all of these blocks. My high block runs out in December, 1st of December. I'm not sure if I'm going to renew it. It's a lot of money. I don't really use it anymore. So I'm going to see if I can find another indicator that might help me with that. And if I do, I might use it. But these are the levels we're at the moment. So we know there's a lot of shorts that can get liquidated at between 38,400 and 39,000. We're on the cusp of that. It feels like that's going to be the next target. The real big block after that is actually down at 34,000 to 33,000. The one at 40 is not as much. But we're struggling to get through this level. And yeah, we're skirting along it. And I get it. You can argue that every time we hit a trend line, we weaken it. My problem is this feels, let me get on a clean chart. Let me just get rid of all those for now. I'll regret that later, but this feels like we are sort of compressing somehow. And whether, you know, however you want to draw it, I'm sure if I dropped it down onto a time frame, we can have a look at it. My worry at the moment is even if we did it wick to wick up here, it's still not perfectly flat. And, you know, a rising compression in a rising market kind of suggests that at some stage we're going to have a correction. And we've looked at other ones. We're going to have a look at some macro indicators a little bit later on. And as good as this pump has been up, and as great as it's been to have a look at our portfolios and how green they've been, particularly alts that have struggled so hard over the last few months, this needs a correction. It needs a correction for the health of its price action. And, you know, even if we just use the EMA, 34K is going to take us back down to that level of long liquidations in 34 to 33,000. And it will kind of take us down almost to the base of where this breakout happened. But we've still got this. I mean, we'll have a look at the market makers sector in a second with exposed vector candles. But look at this. This was an incredible breakout one day, and it's not being retraced. Not being, you know, there's no sniff of a 50% retracement within that, and that's why that 31,000 level is still on my mind. You know, I'm fairly in the market at the moment, 70-75% in the market. So yeah, I've got a bit to play with. Of course, I'd like a pullback to try and get some more in, but I'm not worried if it doesn't. But at the same time, I'm just concerned from a fundamental point of view, in how everyone's talking about the market at the moment. But from a technical point of view, this compression, this rising compression, everything's starting to tighten a little bit now. Yeah, okay, you can argue this bit here was a bit wicky, but even if you were to do it as a rising channel of some sort in a rising market, it's still going to end up in some form of correction. So I don't know how long it's going to last for. We just got to sit on our hands and wait and see. But I really don't want to put too much more in the market until there's a correction. And the reason behind that is that I've already started it for next week's talk, but prior to halvenings, we see corrections in every cycle just leading up to it. And this is no different. We see a pump up and then we see a correction. And that correction can range anywhere from 40% to 20%. So, you know, a 20% correction from here is definitely not the end of the world. 20%. It's down to 30,000. 40% correction. We're gonna be potentially calling capo a genius. But the point is, I feel like there's some correction coming. So even if this continues to climb up, so even if price action continues to climb up, bear in mind I'm 70% in the market, so it doesn't necessarily matter. But a 20% correction, even if it gets to 42, still going to take me down to 33,000. So aping in now doesn't seem like the right thing to do. I mean, even if we get to have a look at some other big levels, let's put this on the weekly, just so it's a bit easier to see for everybody. And let's say we get to, I don't know, this level around it. Oh, that is where we're at. So we get to the next box then, this level around here. Let's just say for some ungodly reason, Bitcoin's price has been climbing for nearly 14 weeks now. doesn't correct. We just continue up here. Finally get my 20% correction. It takes me back to the price we're at now. So, you know, let's say it does manage to climb another $10,000 without any major correction. It takes a few months to do it. 20% correction, which is minimum compared to other corrections we've seen previously, and I'll go through next week, just takes me back to the level now. So the risk to reward of aping the remainder of my portfolio into the market at this level just doesn't seem like the right thing to do. So as painful as it is, I'm just watching it. I have to just watch it. I want to try and clear this up so we can see all this again. Can? But yeah, painful as it is, I'm just going to watch. So 1, 2, 3, 4, 5, 6, 7 full greens in a row, and a little pullback on the weekly. But you know, I take it from here. That bottom there, generally been going up without a major correction. Nice big green candle to come back down. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the 12th week. 5 days to go in it, of course, but this is the 12th week. So yeah, I'm watching, I'm waiting. I've got some, some alts I want to look at, but if Bitcoin does drop by 20%, alts are going to suffer more. So again, sitting on my hands with that, and it's difficult because there's some really good ones that I want to get into, want to get involved in. And I think I'm a little blindsided by the fact that prior to this, I was able to get in at a smaller price, a cheaper price. Whereas actually now I need to really be thinking, is it too expensive yet? But my confidence is that I do think we're going to have some form of correction. That's just my honest opinion. Let's have a look at some of it. Oh, this was the stochastic one in the RSI that we've been looking at on the weekly level. And you can kind of see, I mean, it keeps on defying us. We would be monitoring it since prior to going above 70. Today's action, I can assure you when I looked at this and Bitcoin was down 37,100, I think it got to this morning. This was pointing down, but that's what happens with a live indicator. So it's still rising up, but it's just it's poking its head up above 70. We're getting into very overbought territories, along with the fact that we're deep in the green for greed at the moment. It just seems to me that we need some correction, and I think maybe this is the telling sign. Then 80. I mean, 80 is a high level. Previously, where we topped on the climb out in 2019 prior to the halving. Maybe that's a similar level we're going to kind of get to. I think that's the next real one we've got. The highest obviously we got to was 95. So yeah, it's a weekly chart. All we can do is watch it, unfortunately, and kind of react to it. Stochastic, just flatlining. So neither good nor bad. It can't really go much higher. It's at 100. So we're just waiting now for where it's at. But you look at the chart and you look at where it's going, there's still potentially opportunity for this thing to keep on climbing up. And we have a look at things like, total market cap, very similar to, let's go on a clean chart. Total market cap. What's going on here? Okay, well, interesting with total market cap, 4.2 trillion is a level we've been rejected from twice in the past couple of weeks. And, these candle bodies are getting smaller and smaller now, so maybe we are finding that exhaustion. I mean, any drops are being bought up quite aggressively. Let's not kid ourselves. But in pretty much 4 attempts, we've not got past 1.4 trillion. So for the last month, been a bit interesting there. I got this one on earlier. It's an interesting take on it. So we're talking about Bitcoin dominance. Bitcoin dominance currently sitting at 53%. Impressive. But that's taking into account stables. I was watching someone on YouTube and they did this: Bitcoin dominance times total against open brackets total minus USDC, USDT, DAI, and BUSD. Well, BUSD is dying. Basically, the major stable coins. It's taking out stables from the market. You can actually now see that Bitcoin's dominance is nearly 57% against actual altcoins. Yeah, there's a couple of stables in there, but it's impressive. Very impressive to see. Now, the problem with this is the data doesn't go back very far. So I've only got, what's that, Feb 21. So we don't really have the last bear market to compare towards. But it gives us just a bit of an indication that we are still climbing up. And this looks a little bit healthier, really, with pullbacks along the way. So Bitcoin dominance, maybe Bitcoin has a bit of room to run, and it's alts that fade first. We'll have to, unfortunately, wait and see. on that one. Having a look at some of the other tokens, I just want to quickly touch on OKB. I think I mentioned it in the group earlier on today, but I'm dropping OKB. Not because I don't think, this was my exchange token of choice. I think it's going to do very well in the markets that it's in. But unfortunately, because of the new rules that are brought into the UK, OKX do not allow me to buy or sell OKB anymore. Now, there is some very small volume on MEXC, but not enough for me. And I'd be worried that if I did a decent amount of this in the portfolio and then it did well, and I don't know, MEXC just lost interest or whatever. So I'm just going to drop it. I'm going to put the funds into something else. It's a shame, but it's getting cold. It's been cold now. Where I'm going to reallocate those funds, we'll just have to wait and see. But it means I probably am not going to bother holding a exchange token. And we might as well talk about exchange token and talk about Binance. So this is Binance on the daily chart. Now, Binance is not looking pretty. I'm sorry. You look at a lot of other altcoins and they have done incredible things over the last few weeks. But Binance, barring a little bit of a pump up, has really struggled. And ultimately, my worry is this level. Where's my thing? This level here. This is where we're coming back to. This is where we're retesting. So we shot out of here. Great. We had some good momentum end of October coming through. We had the news about CZ, and for some reason we shot all the way up. Market makers having a bit of fun. We hit the 800 EMA. We've shot all the way back down. We've lost to 200, lost to 5, lost to 10, now lost to 50. And it just feels like this is where we're going. And ultimately, the fine has to be paid by Binance, and if it has been paid. We're still unsure about the SEC decisions. Now, the SEC ones are a little bit more serious because they're involving like commingling of funds and all sorts of stuff. And I've always said that, for months, this is an overinflated coin from the last bull run. And what have we got? I'm going to have to put this on the weekly now. It's going to mess some of the things up. But, it is last line of support. Right on this level here. It's 188. And we're perilously close to this now. It's lower high after lower high after lower low. We are making a flat bottom. I'll give you that. But if we lose it, that's going to hurt. That'll be one hell of a shorting opportunity. I might even fire up the old Burp account on BitGet now, obviously, because Bybit's gone. Because that feels like this thing's going to go. Because there's nothing really between 180 and I would argue 50. So Binance, not saying I want to hold. I don't care. It's only a 3x to its all-time high. So for an alt, the risk to reward just isn't there, particularly when I'm staring down that pit. Let's go with Ethereum. So just going back onto Ethereum, I know we're on the weekly chart here, but actually it's a pretty decent place to have a look at because, we talked earlier about it's made this move up. It's not been as strong as others moves. If we look at it from price range, what have we done? We've done 30%. A lot of altcoins have doubled, if not more. And this is the second biggest. Now, you could argue, they're bigger than other ones. But it hasn't even cleared its yearly high, which is, disappointing. Most others actually have. And we can kind of see, actually, if we get rid of that. But there is some, there is a vector recovery zone all the way back to May of last year, in which it's just screaming to be recovered. But look at what's holding it up at the moment. Right here. So all that price action from the Jan 22. What was that drop from in Jan 22? I can't even think. But all this price action from the drop in the summer of 21, after the April high, before it came back down, it's right into it at the moment. I don't know what this one was. Jan 20, I don't know. But it bounced hard off this one. It's come back down, and obviously it lost it there. But that's what it's running into at the moment. And I really want to see it break that. It breaks it, and as I say, I think we'd clear this vector quite easily. And for me, that's the target. I'm sorry it's in red. That's not very good of me. No excuse. I was just prepping something for next week. So it's just looking a little naffer than it normally does. What colour do I normally use? I don't remember. I don't. It's going to be blue for now. All right, I'm just going to leave it like that. Panicking. But yeah, that's where I'd see it. 20. I think we could get that run up, and then suddenly it's making some good moves. Got So not had a good run, but you know, it's hit that 50 EMA. It's come back down. Hasn't formed a higher high or anything. Looks like it's probably just gonna retrace back down there. It's been in the wars. We've talked about it. We've talked about it for what, last week at least. The troubles are having, just from a marketing point of view, seems to be all anyone's talking about the Polkadot network at the moment. Let's be clear, that doesn't undermine, in my opinion, the technology behind Polkadot. You know, what it's been building in the bear market. Still think it'll be very successful. What they do with the treasury, ultimately, I can't influence. I mean, ironically, you actually can, because it's open gov, but where I'm staking mine, I can't. And yeah, you know, the people will speak if they don't want it, and if they do, well, awful them. But yeah, I mean, it has got the 5 and the 10, which are on top of each other at the moment. You know, maybe it's a healthy pullback before it climbs back up. What I would say, we drop it down the daily. The weekly didn't look great. You drop it down the daily, it's actually a different picture, because we can do that, and we can do that, and there is some form of a bull flag here. You know, that's a really white on white's never good. But that there, however it goes, potentially taking us up there. So that's, you know, one to watch. As long as it stays within this channel it's creating, I think there's definitely potential for that to go out. So and now on the daily, we're still above the 50. Positive to be. That's where the side you always want to be. Coming back down to test that before climbing back up is what I'd want. And you could argue then that actually maybe we've had some sort of W formation down here. Rise 1, maybe it's rise 2, or W formation, just rise 1, consolidate. We're building on from it. So we shall wait and see. Everyone wants to talk about CAS. Let's do that. I think, what can I say about CAS? We've had that huge run up this month, haven't we? Had some pullbacks, but it's done what it always does. It's loved the 5 and the 10, and basically at the moment, we've whipped below it last couple of days, but the 5 has been holding us. The blue line we've got here. Oops. We've come back and we've started to test some of these fibs that we've drawn. The fibs can potentially be redrawn, but actually they've worked quite well, because this was from this move from here to here. It was flat top on what we're seeing with it breaking out, and actually the 414, 272, and then to the 618. It's kind of worked quite nicely. We've got to be careful of a potential double top at the moment. I know today's green, but I think what we need to see to potentially invalidate this is a couple more days of either it just going sideways or actually going up. If it starts just going sideways, this second head just doesn't look very good. Obviously, it starts going up, then yeah, we've got the potential there. But it's come back, it's hit this level, and it's bounced off it. We should just have to wait and see. I mean, a lot of other factors for me are telling me that this needs another correction, like a lot of them do, but particularly CAS. But it just hasn't ever done that in its past, and standard TA just doesn't really seem to work as well as what we've done. So, you know, we got in relatively early enough. We're just riding it, and for those of you who have taken some profit, I think, you know, well done to you. I don't really feel the need myself to take any profit at the moment. Probably because I got in a little bit later than you guys, at around about 4.2. But I'm just gonna wait and see. If we lose the 50 down, I mean, I to be honest, I mean, as we talk about this in Discord, but you know, a lot of things are suggesting to me that this is the area it needs to pull back to for some sort of consolidation. I was obviously looking at the 50. There are times it gets, but you know, it doesn't stay away. It goes away from the 50, but it always ends up coming back. And generally, when it does, it loses it for about a week. This is the level. It wouldn't surprise me if we did see a correction down to that 50. Oops, I need to get my pen out. All right, where's it gone? Let's potentially see it work its way down here. It's obviously got that price action there. The 50 would have climbed up by now, but maybe just seen a quick spike down. So I actually do have some orders set around about 8 cents. See whether or not they get hit. If they don't, doesn't matter. Just while I'm talking about this, and maybe a little bit niche, hopefully you guys have seen it in chat, but I got my tandem set, and so I set that one up today. Pretty easy to set up on an iPhone. I know other people have struggled with it, but I set up the 3 cards. I then bought some cows just to test on Mexi. I've sent it to the tandem. I've sent it back to Mexi, back to the tandem, back to Mexi, and back to the tandem again. Tangem, I should say. I haven't had any problems with it. The only issue seems to be once it's, I can see on the CAS Explorer, it's gone through, but it takes about half an hour for Mexi to actually credit in my in my wallet. So I think that's a Mexi side of things. But yeah, this is going to be what I hold my my CAS on. I still don't think it trumps the Trezor, because this for me, if you have your phone and the card, which if you keep one card in your wallet, I'm not saying you should, that's quite easy for someone to get access to. Whereas this needs to be anchored to something. For me, it's a PC. I'm not carrying my PC around in my pocket, so yes, I could lose my PC if someone breaks into it and all that kind of stuff, but I could lose my phone by just being a drunken idiot. So I'm just going to keep it for the cats. That's it for me. But I've had no issues. I know Sam had some issues, but for me, it's pretty good. Someone just put no liquidity on DEXs for OKB swap. Not that I saw. Let's have a look. OKX. It's just OKX. Oh, it's OKB. You're right. Sorry. Markets. I mean, yeah, there's a bit on. I mean, not much. Look at that. This is it. So vast majority of it is done on OKX, and then everything is either a percent or under. Yeah, there's 5 pages of it, but we're getting to exchanges we don't really know. So that's the reason why. Ryan's put, what's your take on DOT with the FUD around it at the moment? Ryan, I did go through it in quite a lot of detail in last week's call, but just to briefly summarize, DOT, they're trying to be decentralized, so they don't do the marketing themselves. Parity Foundation aren't. They've instead decided they're going to have some open governance protocol in which they will encourage influencers to undertake marketing. They can set their own price, and then if the community likes it, they'll vote on it. There are a lot of influencers that are taking the piss at the moment in terms of asking 20, 30, 50, 100,000 DOT for a few videos. They were being just blanket approved because people weren't aware of it. But that seems to be coming under control. But there's no, for me, there doesn't seem to be any kind of structure in how this can be managed. I think it's a bit of a failed route of doing it. It needs to be addressed. But it doesn't stop me. I'm not planning on unstaking or even selling my DOT about it. I mean, ultimately, it's coming from the Treasury. Now, I don't want the Treasury to be pilfered for marketing, although I do need marketing to happen because I want the price to go up, and it's only really going to go up through word of mouth and get new people in. But Treasury is also there for development of the ecosystem. And so, I don't want to lose all of that capability just to satisfy a couple of influencers. Now, they have to put their case forward, and those that put up a very good case and have a competitive price for it, then absolutely fair enough. But at the moment, it just seems to be a bit like a Wild West. But I don't see how it really is going to affect me. The Treasury's there regardless to be spent. If they waste it all on that, then fair enough. But I still believe in the project. I just don't like how they're marketing it at the moment, or not. I suppose it's getting a lot of airtime just off this, and they ain't having to pay anyone. So maybe it's a great ploy. I don't know. BNC, guys, it's getting on past now. So is there anything anyone wants me to have a look at? Let's have a look at Binance. We talked about this today. Oops. Get rid of the market maker ones. I don't think we necessarily need them. So yeah, I mean, it's effectively got rejected at its previous all-time high. I do think that was caused by a lot of hype within ourselves. It's a small market cap. I know the power some of you guys have in what you want to spend on this sort of stuff. So I think that's what's pushed the price up. It's only natural it's going to come back down. And it is just nicely nestling in this traffic. I talked about buying a Dynex, about 618, which is around about this level as well. Seems like a logical place for it to pull back in. And it's kind of in the middle, the mean, if you will, of all of this traffic. So could I see it spiking all the way down to 74? Absolutely. Base of this here, neckline of that double bottom, little top there. Makes absolute sense that could be an area to look at. I really should use a rectangle because that's looking pretty messy now, but hopefully you get the point from it. But if the market continues to go up, I do see this one just catching it. I just think it's taking a breather from a lot of people who have probably mined it and done very well, just taking a bit of profit. Tau, which I'm not in at the moment, looking like it's a bit of a double top there, and it's on the neckline right now. Again, very overextended. We talk about tokens that have done well. Yeah, this one's over 5x in a month. It needs pullback. It really does need a pullback. And you've got to say to yourself, okay, well, where's it going to pull back to? So let's get out the old fib. For me, I ain't touching this till it has some sort of pullback. Now, look where the 618... Oh, look, we've got the golden pocket still on here. But look where the 618 is. And the golden 618. I've just remembered what color I did it at now. You know, round about 90. From 250 at the moment. But, you know, even down to 180 or 140. I mean, 140, still $100 under what it is at the moment. But taking it back to this traffic around here makes sense to me. So I haven't started looking into this one. This is another one that people say is very complicated to understand. So probably take me about another 8 weeks. But I know there's a lot of hype again in the community about it. It's an AI-led project. So yeah, you know, let's check it out. Let's see if it's any good. I just to sort of give you a bit of an update. I'll have a look at Claw in a second. I had a chat with someone that used to be in our group. He's not anymore, but we remain friends. And this remaining portion I've got, I think I've just been a bit safe in some of the tokens I've got, and actually maybe it is starting to just get myself spread again in some other sectors. So I am looking particularly at the gaming and the AI sector for new opportunities. So Beam's one of them. IMX is another. There's some other gaming tokens. I mean, we had that whole sector on gaming around here that I just want to sort of get my head back into them all, see if there's any potential you know, gems and opportunities in a sector which I think is going to do very well. So I may start to have a look at that pot 3 that I've talked about previously, being my shitcoin pot, my bigger risk pot, starting to fill that one out now rather than, you know, going into just potentially some safer ones, because ultimately we do need to take a little bit of risk, and I've got a very safe pot at the moment, I think, in terms of diversifying, try and take some gains, accepting the fact that some of them may actually end up at 0 or no gain, but some of them may do very well, which will offset. So that's just to let you know. Yeah, Claw is definitely taking off. So let's just tell you what, let's add that to the Avengers call list. But again, today alone, it's 75% up. Now, I get it. Don't get me wrong. I completely get it, guys. Without doing any research on this, it's got to pull back, and it never does. At some stage, this will pull back. This project is young. It's less than 2 months old. It might be now 2 months old. So this could just be, without, because I'm not looked into it, this could be unlocks, this could be vesting periods, this could be just, you know, well, maybe not pump and dump, but this is getting a lot of airtime on a very, very small cap project. And if it corrects, just look where it potentially could correct to. Where is the logical place for it to correct to? Because it's so young. Here. So now we're talking from 23 cents, potentially down to 2. I don't care if I've missed this one. I ain't touching it yet because it just doesn't feel natural to me. I mean, look at it on the weekly. A brand new project. Not something like Kaz, which has this on the weekly, which has been going for over a year. This is a project that started in September. And 1, 2, 3, 4, 5, 6. Yeah, 6 weekly green candles. Matter of fact, of the 13 candles there are, there's only been 4 red, 9 green. I mean, let me show you. Let me show you what that looks like in my mind. Looks like that. That's what that one looks like to be. Massive pump up to start off with. Everyone excited about it. It'll find some form of correction. So for those of you who got in it, great. If you haven't taken profit on this yet and you got in it at 2 cents, you're an idiot. I'm sorry if you don't like that terminology. You are an idiot. Even if you take 10% profit, take whatever out you've originally put in. Don't be a greedy idiot, because if you can't take profit on something like this now, you will never get out of a bull market at the height of bull season. That is a fact. So if you were in it, sorry if that's a preemptive bollocking, and you haven't taken a little bit off the table, you don't know how to trade. You just gamble. Yeah, that's my insight for that one. Okay, let's go back. Decided to give everyone a little telling off. Anything else really? I mean, Rose has been doing well. I kind of felt we go over the same things. I think that anything you look at the moment is due a pullback. It seems to be quite overextended. Of course, what's on the right hand side for me is just so what is the name of the fib indicator? So it's just on the toolbar. So if you go on the left hand side, and I just use a fib retracement. So if you click on it, let's just draw one. It hits settings. There's different ways you can set it up. Okay, so what you'll actually get is all of these will be unchecked. When you draw one, it'll look utterly crazy. So you just take off the ones you don't like. I can't remember which ones they were now, so more for me. Don't think I had that or that. Probably had that one. Don't need that one anymore. Let's see, I can have a look at them here, can't I? That seems about right. And you can change them. You can change them up to be whatever you want as well. So that's kind of what I've done. But if you go into the portal and have a look, and no, you won't. You have to actually go into VMO itself. I'll tag you in it. I did like a 45-minute tour of TradingView to just go through all of the different functions. So if you're relatively new and you look at TradingView and you just don't know where you find some of this stuff, I'll send you the video. I'll pin it in the group, and you can just go around and have a look. But yeah, this isn't an indicator as such as a tool. There's loads of other ones. I don't even know you use things like a fib spiral or a speed resistance arc. I choose fib retracement. Pretty simple, but for me it works. A lot of people don't buy into it. I just do. It works. I feel like it's a very safe tool that will give you some good returns, particularly if you're looking for exits or entries, and especially if you're looking at day trading. It's got some good targets to look at. Now, if you are going to use it, you've not seen me do it before, what I then do is I equate price action to this. So I know I've not drawn it in the best place, but I'd look at this one here and I'd look back and go, okay, it's an area of interest there. So it's a box I draw, and that could be like $1 difference. And then if you are going to trade from it, you then need to determine what levels you want from that. So it's not just as simple as drawing that. You've got to apply your own critical thinking to it. Okay. I think that's kind of it. I mean, the one thing that's just been catching my eye at the moment solely for is silver. I'm looking to try and sell my silver, and it's climbing quite nicely at the moment. So I bought after the pandemic, so I just think I'd rather put it in crypto. So it's not one we normally talk about, but it's getting to a price which I'm interested in starting to sell, because at least 2x where I am. Of course, it's difficult to bloody sell this stuff, especially you got a lot of it. So yeah, that's it from me, I suppose, everyone. There's a lot in there, so appreciate your patience and bouncing around from topic to topic. Just a lot of things I just wanted to cover from previous weeks will come out of date. And in terms of overall sentiment, I'm kind of happy with where we're going. I still do see that there is potential for room to the upside. We talked about lit levels, 38, even in the early 40s. But just be cautious, because although we can go up, we can't continually go up for ages. And next week, I'm going to have a look at, previous cycles and sort of pre-halving rallies and corrections, etc., and where that can be. And I think if it doesn't happen before then, we are going to be due one. And we just need to be careful not to be caught out from that, because it could feel like an absolute stinger, enough to demoralize us. So yeah, just be cautious if you're going in. Other than that, hope you enjoy everything. Enjoy the rest of your evening. Enjoy the rest of your week. Got any questions, feel free to hit me up. Other than that, I'll say goodnight. Cheers now.